So Dan, let's just start here. The yield pressure, 20-year hitting over 5%, but I think the real thing that we're looking at right now is the 10-year at about 4.75%, putting a lot of pressure on tech on top of a rising dollar. How do tech stocks move higher with this setup?
Yeah, I think there's two things playing out. I mean, one, fundamentally, in terms of AI, CapEx, use cases, what we're seeing are strong on the enterprise as well as on the consumer side. That's actually better than expected. And I think we'll see that over the next month in terms of earnings. Now, clearly, look, we've gone through this the last few years. In terms of the 10-year bond risk off, we're going to have these moments. But our view is these are the opportunities to own the winners. And as the fundamental cases play through, look, Frank, I only think we're halfway through this tech bull market.
All right, we're only halfway through. I do want to talk to you about Palantir. That's one of your top 10 picks. Under pressure once again. We've seen, after it was the best performing stock in the S&P last year, we continue to see a sell-off and the stock be under pressure. Are you concerned about the valuation like so many other people say they are? They just believe the valuation's too high, and it would be very difficult for the company to live up to the lofty valuation.
Yeah, I think if you just stick with valuation, you've missed every transformational tech name in the last 20 years. I think Palantir, I continue to view as that's the next Oracle, the next Salesforce. When I look at AI revolution, and let's talk about numbers, $2 trillion of AI CapEx next 3 years. And I think where Carp and Palantir position, as it plays out, we're going to have these sort of white knuckle periods. But ultimately, I think this could be a 3-digit stock as it plays out. But these are the times that you ultimately look at the winners and how to own them.
All right. So you and I have talked about this before, the rise in the dollar. I'm looking at a 1-week chart of the dollar. It's up about 1.5%. These are tremendous moves when it comes to a currency. We did get a spike after the jobs report, but still, it was still moving higher last week overall. I know you're bullish on tech. You're always bullish, just to be fair. You gave us your top 10. Out of these top 10, which do you see as being the most likely to be impacted by this rise in the dollar due to their revenues coming from overseas?
Sure, Microsoft, Oracle, probably 1 and 2 in terms of ones that are exposed. I mean, Apple clearly will also have some headwind. Now, look, I think the street is already factoring in some of that in terms of estimates. I don't think this becomes that dramatic if, ultimately, if we actually start to see this curtail. But it just comes down to, Frank, I think we sit here a month from now, it's a much different picture because of the fundamental picture right now that plays out in tech, as this actually is seeing strength being led by the AI revolution.
Okay. But we have seen a lot of weakness in tech, Dan. Let's just be fair. We were just showing a chart from Mike Santoli's column over the weekend showing the current bull market and the average bull market. If you look at the average bull market, this bull market has a lot more to go, but it seems like tech, it doesn't seem like it, just due to the concentration, tech has to be the engine moving it forward. So if we go to the next Fed meeting coming up later this month and the Fed continues to be hawkish, do you see that continuing to impact the tech trade? Because that seems to be the inflection point, even for the tech trade, even though we call these stocks defensive just because of their bulletproof, cash holdings and everything else.
Yeah, look, and that's also why you have a diversified view in terms of whether it's an Oracle, whether it's Microsoft, and some of the more high growth names like a Palantir, Tesla, and others. Look, it's going to be a headwind, but our playbook the last few years has been you use these opportunities to own the winners. And that's why I get the bears are going to come out. Right now, the bond market, the 10-year is going to ultimately dominate, but we're only halfway through tech bull market. And that's why I still believe tech stocks are up 25% this year. We look back at this as an opportunity, not time to hit the elevator and ultimately hit the exit.
Nvidia seems to be striking never-before-seen deals left and right, while also coming out on top and remaining the top winner in all of this. The latest example being Microsoft announcing a staggering $80 billion investment to enhance their data centers aimed at training AI models and bolstering cloud-based applications on a global scale. The move aligns closely with Nvidia's interests, as this spending spree indirectly promises a significant uplift for the chip maker. But how much of a winner is Nvidia, and is it going to be momentarily? Welcome back to Investocracy.
So it's not just about fundamentals, it's also about sentiment. Sentiment's a big driver in the market. Which one of these earnings reports do you think we need to watch to look at sentiment? Which one's going to tell us really where the tech trade is as far as the investor sense of their confidence in the bull market going forward, their confidence in this AI trade?
Yeah, I think Microsoft, because I think as long within Nvidia, those are probably the best in terms of barometers for what we're seeing with AI, and ultimately that's a stock that's also been under pressure. And then ultimately you look at Apple, because Apple right now, whether it's Zuck, whether it's some of the downgrades, a lot of pressure in terms of showing what we're going to see, specifically coming out of China in terms of demand.
You mentioned Zuck. We do have a soundbite we want to play from Zuck on the Joe Rogan podcast. talking about Apple. We're going to play it. I want to get your take.
Great.
Just because they've been so off their game in terms of not really releasing many innovative things, that eventually, I mean, the good news about the tech industry is it's just super dynamic and things are constantly getting invented. And I think companies, if you just don't do a good job for like 10 years, eventually you're just going to get beat by someone.
All right, your take, a kind of aggressive take from Mark Zuckerberg. Ever since he started those MMA classes, it seems like he's just a different guy. He's got a chain on, it's a different thing. But in all seriousness, do you think he actually has a point about Apple and their innovation?
Look, it's an MMA battle with Cook and Apple. And because it comes down to 30% in terms of, with the commission, what they're taking. And we're seeing this sort of Game of Thrones play out between Meta, Apple, and I think across the rest of tech because of where we're going into it. It's frustration from Meta's perspective. But look, for Apple, as we've talked about, this is the year they have to ultimately not just innovate, but show the consumer AI revolution does go through Apple. And I think Zuckerberg recognized that.
The announcement from Microsoft set tongues wagging and stocks shuffling. At the heart of this groundbreaking investment lies the urgent need to address capacity constraints in the company's AI services. Evident clues pointed towards this massive expansion. Microsoft's finance leases for future data centers stood at an overwhelming $108.7 billion due to roll out from 2025 to 2030, signaling long-term commitment to infrastructure development. Nvidia emerges as the potential winner, backed by cold, hard numbers. Microsoft has dramatically increased its GPU purchases from Nvidia, making it Nvidia's largest client as of 2024. This move forecasts an escalation in procurement for 2025. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
All right, well, Bernstein Research reiterating Nvidia as a top pick. Analyst Stacy Raskin has a $175 price target on the stock, which implies a 17% gain from today's close. He joins us now. Stacy, what are you expecting from Jensen tonight?
Yeah, as you said, Jensen puts on a pretty good show, right? It'll clearly be all around AI. We'll see if we get updates on the data center side of things, Blackwell, Rubin. But at the same time, this is also the consumer electronics show. We'll hear about gaming probably. We'll probably hear about automotive. We'll probably hear, like, as you mentioned, rumors maybe that they're pushing into the PC space. We'll probably hear a lot about robotics and AI at the edge. I think he's got plenty to talk about and plenty for people, I think, still to be excited about.
How much is the story going to also be what is being announced around NVIDIA, not just NVIDIA specific, but sort of just the whole ecosystem of AI, this becoming, now the mainstream? It's not just corporations building up data centers, but it's a consumer product at this point, or we're entering that phase.
Yeah, I hope we're entering it. And we had some updates today, some keynotes from Intel and AMD, and they both talked a lot about AI PCs, where we have yet to see that driving like a lot of like incremental strength in the PC market, but I think there's always hope. Qualcomm, the same thing around AI smartphones. So certainly the technology is the point where it's starting to get in consumers' hands. I think we'd love to see it start to drive actual upgrades of devices on the consumer level. I don't know that we've necessarily seen that yet, like in any sort of like large amount, but we're all hopeful. We're all hopeful.
Stacey, you've been bullish in NVIDIA probably 90% of the time, and you've been right to be bullish. Here's my question. If there is a competitor out there that concerns you, who would that be? What company is it?
Yeah, so if I think about long-term, how does this market shake out? I think GPUs are very important, but I'm not actually convinced at the end of the day it's like two GPU vendors. Like I cover Broadcom, for example, who does ASICs, and I actually do think the ultimate shakeout, it's probably NVIDIA GPUs, and then for captive workloads at hyperscalers, it'll likely be ASICs. They're all working on their own. And I suspect ASICs, frankly, will probably outgrow in the sense that they're coming from a much smaller base. But you can do the math today. If I was, it's a little bit of monkey math, but I bet ASICs relative to GPUs, ASICs are probably low double digits, 10, 11, 12% of the spend today. Could that number be, 20% of a much bigger pie in 5 years? Yeah, I think it could. But my guess is that's the likely competition. Now, yes, does it worry me? It doesn't really worry me at this point because I don't think we're on the saturated part of the S curve. right? Things are still growing. So right now, I think that the question asked is it a big market or is it not? If it's a big opportunity, I think there's room for everybody. If it's not a big opportunity, then everybody's in trouble, right? So I think that's the question that you want to have confidence one way or the other. I'll worry about competition later. I don't think it's the time to worry about it now.
The investment outlook remains promising. Nvidia's forward price-to-earnings ratio of about 31.4 and a price-earnings-to-growth ratio of 0.98 suggest undervaluation, especially for a growth stock. With Nvidia positioned as a primary beneficiary of Microsoft's prodigious $80 billion outlay, the company is well poised for sustained investor interest and growth through to 2025. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So if you have a $175 valuation, how do you get there? What are the metrics that you think are most important here?
Yeah, it's earnings and multiple. And I'll be honest, I can't actually remember what multiple we're putting on it right now, but I don't think it's egregious. The stock today, as of today's close, is trading at about 38 times forward, which is kind of right in line where it's trading. If you look at the 5-year average or the 10-year average, that's kind of where it is. And I've made this point on the station before, but as strong as the stock has been over the last year or I guess 2 years as this has gone, it's actually cheaper today than it was before it started, right? I mean, as much as the stock has gone up, the earnings have gone up even more, and the multiples actually come down. And the multiple today, if the numbers are anywhere even close to right, the multiple's not egregious at all at these levels.
As Microsoft embarks on its $80 billion data center odyssey, Nvidia stands at the threshold of a golden growth phase. The current valuation of Nvidia, depicted by its forward PE and PEG ratios, amidst a backdrop of explosive AI infrastructure spending, provides a compelling case for investors. What are your thoughts on Nvidia's position in this technological renaissance? Share your perspectives. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.